Pursuit's webinar on how to calculate your PPP loan amount. I'm Chris Levy, Chief Credit Officer of Pursuit, and today we'll be talking about how to calculate your PPP loan amount for a Schedule C business with employees. Now, a Schedule C business could be one of many things. It could be a sole proprietorship, or it could be a single member LLC that is filing on Schedule C of the personal tax return. This Schedule C document is an income statement, a profit and loss statement, which is typically incorporated into an individual's personal tax return, but includes business activity. Today, we're going to talk about how a business like this can apply for a Paycheck Protection loan, including what documents you will need, how to calculate this loan amount, and we'll also provide examples so you can see real life numbers on how this works. The first step is gathering that Schedule C document. This can be from 2019 or it can be from 2020 based on the current rules from the Paycheck Protection Program. If you choose to use 2019 but have not yet filed your tax returns yet, you can complete a draft form of the Schedule C and use that to calculate your loan amount. The Paycheck Protection Program loan is based on 2.5 times the business's average monthly payroll. For purposes of this Schedule C form, this will be from line 31, which is going to calculate the owner's average monthly payroll. Next step is to incorporate the employee salaries that are included within the business. This can be done in a number of ways. For businesses that use a third-party payroll processor, such as ADP, Paychex, Gusto, and JustWorks, this is a great document to utilize to figure out what your employees' salaries are for the year. Typically, you can go to your payroll provider and they will have a specific document geared towards the PPP program. If not, you will use the average or the total gross receipts for the year in which you are calculating your average monthly payroll. If you don't use a third-party payroll processing firm, your tax documents will be able to utilize instead. One of the forms that can be used is the employer's annual federal unemployment tax return. On this form, you will utilize box number 3, which is the total payments made to all employees. This will give you the employee salaries for the year. You can also utilize IRS Form 941, which is the quarterly payroll tax summary. For this, you will gather all 4 quarters of the year for 2019 or 2020, depending on which year you are using, and utilize line 5C on the return to calculate your average monthly payroll costs. You will take all 4 quarters and add these together to get the total employee payroll amount. In addition to the payroll documents, we will also need a statement proving that the business was in operation. This could be IRS Form 1099 miscellaneous, which details contractor payments made to the employee. Similarly, bank statements, book of records, or invoices showing that the business is self-employed would satisfy this requirement. The program also requires that the business be in operation on February 15th of 2020. You can provide a bank statement, book of record, or other documentation showing that the business was operational as of this date. Now that we've gathered the appropriate documents to apply for the loan, let's utilize these to calculate our maximum loan amount. The first step is to calculate either our 2019 or 2020 payroll for the year. Please be sure that you're using the same year for all documents gathered. You cannot mix and match between years. Again, if you are using 2020 but have not yet filed your 2020 return, you can fill it out in draft form and provide it to us. We're going to utilize the Schedule C net profit number from line 31. The maximum allowable figure for this line is $100,000, So if that net profit number is above $100,000, reduce it for $100,000 for this calculation. If the amount is zero or less than zero and is a negative number indicating a net loss, that net profit number will not be utilized for the calculation. We will only utilize employee salaries. The next step is to calculate the employee salary number. Again, this can be utilized from your IRS Form 941, IRS Form 940, or your third-party payroll processing records. We will only utilize employees whose principal residence is in the United States for this calculation. In addition, employees have a maximum of $100,000 salary on an annual basis. Also, that can be included in this calculation is employee group health, life, disability, vision, and dental insurance, retirement contributions, and also state and local taxes assessed on employee compensation. You'll find these on typically on your third-party payroll processing records, or you can provide additional statements to support these figures and include them in the annual payroll amount. To summarize step one, we are going to take the net profit from Schedule C, line 31. We will include all of the gross wages paid to employees, as well as employer contributions to fringe benefits, and add those figures together to calculate the annual salaries for the business. Again, remember that each employee maximum is $100,000. The next step is to get the average monthly payroll, which we will do so by dividing the sum of the numbers in step 1 by 12 to get your average monthly payroll figure. From there, we will complete the calculation by multiplying this figure by either 2.5 times for most businesses, or if you have a business in the food service or accommodation industries, these are with NAICS codes beginning with 7.2, you can multiply by 3.5 times. So again, we will take the average monthly payroll, which was calculated in step 2, and multiply that by 2.5 times to obtain the maximum loan amount. We are now going to go through a couple examples so we can put real numbers to the test here. We're going to start with our Schedule C net profit on line 31, which in this example is $48,000. We then calculated our annual employee payroll at $120,000 based on those tax forms and third-party payroll records. We're going to add these two numbers together to get the business's total payroll for purposes of calculation, the PPP maximum loan amount. This, in this example, adds up to $168,000. To get our average monthly payroll, we will divide this by 12, which in this case equates to $14,000. To calculate our maximum loan amount, we will take the average monthly payroll of $14,000 and multiply it by 2.5 times in this example to get a maximum loan amount of $30,000. Had this business been in the food service or accommodation industries with a NAICS code beginning with 7.2, the average monthly payroll could be multiplied by 3.5 times to garner a larger maximum loan amount. We are now going to move on to a second example. In this example, the slight difference is that the Schedule C net profit located on line 31 is $110,000. As noted earlier, the maximum that can be calculated at this line is $100,000. So for purposes of our calculation, we will use $100,000. We will add this to our annual employee payroll of $120,000 to get a total payroll amount of $220,000. In this case, we will divide that by 12 to get our average monthly payroll of $18,333. That becomes the maximum loan amount when we multiply it by 2.5 times or 3.5 times if you were in a food service or accommodation industry to get the maximum loan amount of $45,833. Typically, your lender will round this in order to have no decimal cents in the loan amount, just to make it cleaner for accounting and documentation purposes. We have a third example here. In this case, the Schedule C net profit is listed as a negative $10,000. As mentioned before, a negative number is essentially setting your business to zero for the net profit. However, in this example, there remains employee payroll of $120,000. That $120,000 will be used for the calculation of the average monthly payroll. Once we divide that number by 12, we get an average monthly payroll of $10,000. And again, we'll multiply this by 2.5 times to get the maximum loan amount of $25,000. Now you should have an understanding of how to calculate your loan amount for purposes of the Paycheck Protection Program if you are a business that files on Schedule C and has employees. If you have further questions regarding this calculation or other questions regarding the Paycheck Protection Program, please visit our website, which is linked here. Our website has up-to-date information on the application process for the Paycheck Protection Program, as well as supporting information for help in calculating your loan amount and many resources available to help answer all of the questions that you have. Thank you again for watching this webinar, and we wish you the best of luck with your application to the Paycheck Protection Program.